Bruce. Great to have you.
Dale, everybody,
Welcome
hi.
back.
Thanks for having me. I could have listened to you guys for hours. It's just like,
hey Bruce, good to hear.
I didn't
good
want
to see you.
Hi Blake. It's
Huh?
anyway,
it's
kind comments.
it's like a hockey game, you know.
It is.
And
yeah.
in the end, passes the puck to the Swiss, and the yields are at new highs, and S&Ps collapse under the breakdown. Yeah.
He shoots, he scores.
Yeah. How are you, buddy?
I'm doing all right. Yeah,
Good,
thanks.
good.
And I always appreciate the way you bring me on these, like, really mundane days, where
yeah. Well, maybe we need a dose of sanity with what's going on, and the hope
you're not going to get it here.
Oh yeah, so. I think we'll get some clarity though. And I was going to say, when Blake was going to ask me what I would do today, I was going to say nothing till I hear Bruce.
Oh, well, you can see so stocks on the edge. Can you see my screen?
Yeah, got it.
Okay. Yeah. So it's like, there's nothing to talk about. Anyway, so anyway, my perspective is maybe a little longer term, but I'll try to make it relevant. And so let's go in and just pick up a couple things from what you guys have been talking about, just for the heck of it. And so one is to talk about the dollar. Now, this is a monthly, so you can tell my time frames are different, but Blake actually put this chart up. And so here we have this great throwover right here on this monthly, very long-term chart. And we had a beautiful hit right in here, classic Wyckoff trendline construction. But over here on the right, this is daily UUP. I know you all look at better currency relationships, but it's good enough for what we're talking about. And so this is what we call reverse use of trend lines, because you're drawing the trend line over the top of the market. Beautiful uptrending channel, 2 touches, which is what you'll look for, adjacent, throw over, which Blake had pointed out, and then a very deep reaction. So we would call this, with the gaps and everything, a buying climax with a throw over, and then an automatic reaction almost all the way back to the bottom of the channel. And so we would just say this is a range bound market. And that's the way I'm looking at it, is that you probably get back, return back to the top, maybe over the top of this, but very briefly. I think this is important resistance.
Do you see multiple throwovers on lines like that?
Oh yeah, well, I'm not sure you can get back up to this overhanging supply line, but you definitely can get up to this buying climax peak and maybe a little higher. But then you would look at that. Wyckofians would look at that for the signs of exhaustion and resistance, and then a return back down, and then just sort of this kind of business. And it could be what we call a reaccumulation for another move, or it could be the opposite, but it's way too early to tell. We look for the elements of cause building. And so we need a cause here, and we've exhausted a very, very big upward move. I mean, really an incredible run in the dollar, and then had a big climactic crescendo, and that usually does usher in a range bound condition. So just that. And then I know I don't have a lot of time, but let's go to you all were talking about the Treasury bonds. Now this is the TLT, just as a proxy.
I use that proxy.
Yeah, Dale, look at this big distribution. I mean, this is the top. So here's July, August of last year, and then here's January of 22. Big top here. And I mean, coming in at 152, and we've declined off of this in this count, classic horizontal point figure counting, and down 101.91 is our range. And we did, in fact, I believe this chart is as of the end of the quarter, but we did touch 99 subsequently. And so we are in the middle of this count area. And then this count here goes down. This is redistribution, we would call it, goes down to 99. So these two areas confirm each other. And so it wouldn't surprise me if we now see some kind of a pause. Maybe we build a cause. Maybe it's a cause for more important or a rally of sorts. But the one thing we can just say is that this thing is, you know, really, really oversold.
When you think about that sovereign debt, taking a 30% haircut in that amount of time, you just and you know, then you move to corporate and you move to junk, and how are companies going to be able to roll over debt, let alone governments? And do you think what's happening in the UK, and if you line up their gilts and this, you did point and figure, they wouldn't look that much different. Yet we're calling it a crisis in the UK, and we're calling it just Fed tightening here.
Well, and we have to call the CPI at 8.2 a crisis. And I believe it in an earlier episode, you and I talked about, I did a point and figure chart on CPI, very kind of a unusual thing to do, caused a lot of people were kind of upset with me because I had counts out of the accumulation base that went up to the area that we went to. We went for, it's like the range was like 8.5 to 11 CPI. And then there's a bigger count that goes up into the high teens. And we don't even want to think.
That's not till next year.
Yeah, right. And so kind of the view we took is hitting this initial count over 8, 8.2, 8.4, 8.5 is that we now are range bound for a period of time. And so sort of the view is, my kind of point and figure view of the CPI is just that it is range bound. It's going to be stuck in this area. The Fed's going to have a very difficult time getting inflation out of the system, and we can hope that they could get inflation down to maybe the 6s or the 7s.
Oh, 6 or 7s. Okay.
Yeah, and that still could be construed as building a reaccumulation for another big move. And I had a great interview with Martin Pring over the weekend. We did an interview at ChartCon, and Martin's one of my mentors and a dear old friend. And
I loved his work.
Oh my gosh. I mean, you know, and he's just doing great. And so we were talking about this whole business with inflation, and he's using the analog of the 60s to the early 80s as his analog for the inflation.
So we're just in the 60s now.
Yes, exactly.
Okay.
Exactly. Yeah. And so we're in like,
I don't remember the 60s.
No. If I'd been around in the 60s and 70s, I wouldn't even admit it.
Well, I'm not talking about the markets. I don't remember anything.
So
anyway, go ahead, please.
So
I'm an open book.
I know. Well, that's why it's so much fun to be here. Anyway, this is a chart, but kind of a working chart for me. S&P, this is the SPY. Here's our big distributional top back here in late 21. And we created this downward trending channel. We're currently now this is the end of the quarter. I'll update that in a second. And so oversold at the end of the quarter. I find quarter end very important, but this area here, we hit this count when we got up to the August peak, which was also a touch of the 200. And so a number of resistance conditions that came in across this area. And so if we go here, let me get rid of this mess I made.
So do you consider like we're in breakdown territory and the recognition phase is about to occur where people are just embracing and we get some pretty good acceleration to the downside?
You know, that's kind of what I came prepared to talk about. And so you're way ahead of me as usual. And so here, this is through the 12th yesterday, and I'm going to show you an analog that might inform our view here. But So we've gone down, taken out this low, but I do want to
That
point out
test
these.
at 3,800 was really key, wasn't it? That bounce that we had.
Absolutely. And
that could be like a bull bear line for you, Bruce.
oh,
Like
for
if we
sure.
ever got back above 38, the pictures change.
Well, and no, see, I'm going to call this in a minute. I'm going to show you an analog. This is what I call ice here. And look at how we've rallied up to the ice. We had that 2-day big upward thrust, and then it just stopped and completely took it all back. So that's really
vicious.
Vicious, exactly. And so I'll update this a little bit with an analog, but I want to just point out to everyone the one thing I look very closely at are the quarter ends. And the quarter ends, you can see, because markets are dominated by institutions, and they're either buying up stuff at the end of the quarter because the market's super bullish, or they're selling stuff. And there's a few of them that are wickedly smart, but a lot of them that just follow along the other institutions. And so here you can see important low into the end of September 21, and then like right at the end of the year, the final top in the market. I mean, not an accident. And it's a throw over and an up thrust. By the way, this kind of could be an analog for what we just saw in the dollar, the UUP, where we talked about this upward acceleration, throw over at the top of the channel, automatic reaction, range bound condition. So this is kind of what I was referring to. And
okay, where it could make another high and test the line up there.
There, yeah, right.
That wasn't much of an overthrow there, though, in November.
No, it wasn't. But this was really quite an exceptional climactic run. Okay. So that would be the thing that I would point to. But you're absolutely right about that.
You know, that'd be a great dance, the throw over up thrust.
Yeah, well, I've been to some dances when I was concerned about the throw up. And so, but that was many years ago.
Oh,
that could have been this.
That punch.
No, that could have been the 60s.
Yeah, that was the punch at the party. I mean, Everclear.
Yeah.
It's all right. Yeah, every time you come here, you talk about the markets. We take a little trip in a time machine, man. So
I just reveal myself. Yeah. Anyway, so I'll talk here a minute about green shoots if we have time, but yeah, I do want to show this decline down to here. Also notice quarter end, right? So mid-June low, test of the low, really good rally.
Yeah.
End of the quarter, important low, weaker decline, now back below it. And we'll talk about that a little bit more on this next chart. Let me go back like that. This is so I don't want to be completely bearish here. It's like I want to be able to focus on, the possibility of two different things. And so because we are at these important lows, here's the S&P 500, 72 years of data, 1950 to the present. And all I did was I just took midterm election years. So we're in a midterm election year. And a couple things. There's seasonality of the 4-year cycle that shows us having an important mid-year low in the second year of a presidential run. So, which is where we're at. Right. But then there's another way to look at this, and that's just to take out the midterm election years and see what the seasonality is. And so here is the average seasonality of the just the midterm elections, which is every 4 years. So it's not 72 years of data, divide that by 4. And then you can see here that at the end of the quarter, you can see that we have a spring low across here. And so that it's a lower low. Currently, it's exactly what we have right now. And then the fourth quarter of the year is the best quarter for performance. And so I just wanted to give us two looks, not be completely bearish here, because there is potentially a case. I think the high CPI is the mess that we have to deal with, which could negate this. and I'm going to show you an alternative to this scenario. But here is an overlay of the S&P in 2022. And notice the family resemblance between 22 and the average of these midterms. So we had a Feb low, came in March. We have a March, April high, came in late March in the middle. We have a May low, We have a June low, And then we have an August high and an August, September high here. And then we go down to make new lows, which is exactly what we've done here. And so we're right now nesting on the end of the quarter lows, and that, and then the potential anyway for some kind of a rally coming out of here. And again, I'm not saying that this is my preferred outlook. I'm just saying it's a view, it's a possibility. And so we need to remain open to that. So let's now go to our
Larry
analog.
Williams has a view like that right now, doesn't he?
Yeah, as a matter of fact, I got to spend time with Larry this last weekend. And
you were with all the famous market celebrities.
I know they let me hang out with them.
You know why? Because you are one.
No, they let me hang out with them, Dale.
Yeah.
Just like you let me hang. Yes.
Yeah, I saw
you
that
let me.
Picture.
Yeah, you let me hang out with you. So it's
Right.
like I'm a lucky guy.
Hey, I asked David Keller. I said, you have to invite me up there. He just ignored me. I wanted to meet everybody. Anyway, that was a great thing. It's still on tape too, where video, where people could watch it.
I think it came out yesterday. So, but Larry was a real joy. I've known him for, gosh, I think the first time I heard him talk was 40 years ago, and I just really, I love him. He's old school. He's fun. Anyway, so this analog is kind of unusual. This is daily data, SP 500. And this is 2018. We're going to look at the end of the year 2018 and note. Go ahead.
No, that's when they all sang Kumbaya. Paul and Bernanke and Yellen got together.
Yes,
Kramer made his rant at the bottom. No, that was a different rant. But yeah, that's when Powell reversed, right? The end of December.
Yes, exactly.
Right.
And so here, notice end of the third quarter. Look at this beautiful upward stride, gets tighter and tighter, diminishing thrusts. And then finally it has a thrust that fails at the end of the quarter. So you've got these institutions just pushing up their favorite stocks, change of character in the fourth quarter, right as it begins, and down it goes. And so then we have a redistribution, and this area here. So let me just show you this. This area is a classic redistribution. Now, again, this is daily and is followed by this waterfall decline into the end of December. Now, here's a point and figure chart of the yellow shaded area, and it goes down to this 2450, 23 and a quarter, rather wide count because it's a wide structure. But look at, we went right down within one box of the low count of the range, and that was the V bottom low. And so the thing that is of most interest here to me is this: if in fact we had a new low here, and then we had an attempt to rally here, kind of a wedge actually, and that we call this the ice, because what it does is it comes up and it gets underneath the old support, tries to get back into it, and has a rally of poor quality, big tail right here, and then down it goes. And so this is just my kind of warning about the market here, and that the Fed is currently in a mode where they're basically going till they break something, and the very strong dollar is a great way to break things in the rest of the world. And so the dollar strength, it creates tremendous stress, especially in smaller developing countries, because a lot of times they price their debt in other currencies, which is the reserve currency, which is the dollar.
Why does
And then
the
when
Fed want to accomplish that? I know they're accomplishing that, but why do they want to break other economies that have dollar denominated debt? Who's going to bail them out?
I think that their whole view is that they want to destroy demand in the marketplace to bring prices down. And so they understand that there's consequences because the Fed's fighting always, their mandate is low unemployment and low inflation. And those two mandates are in opposition to each other. And so
financial stability.
And financial stability. And when they tighten like they are now, they're trying to wring excess demand out of the system. And also inevitably they're
you had it right the first time. They're trying to wreck economies with the dollar.
They're going till they break something. And that's exactly what they did in here.
Going to break before we go, Bruce? And it's not going to be, some kind of toy from Walmart or Target.
Well,
what are they going to break?
Remember that they did the Credit Suisse. There was rumors.
Right.
There'll start to be rumors, and it's going to be these, kind of where's Waldo moments where we're looking for where, Waldo, because Waldo's going to be broken. And so this is like the Credit Suisse was a rumor, not saying I don't know anything. But all I want to do is I want to take the current market and I want to do a bit of an analog as our conclusion to the session, because I know we got to end. But here I just lined up this is
Thanks
weekly.
For getting me back on track.
Well, because I know you're pretty ruthless about
very good time
yanking
manager.
me off stage. See, so
I got the hook ready, man.
I've been schooling on you. Anyway,
right.
So here's a redistribution, and now here this is all one redistribution, and on this weekly chart we have two of them. And I actually think that what we have, and here's the point figure chart of these two redistributions, they both count roughly into the same area with a 3350 extreme low. And we're just now starting to break down. And here's the 3800 area that Dale was talking about right there. So you can see it trying to hold that area. And if it can't get back above it stat, then that we have the potential for this business. And so just these two arrows show what I think the analog lows are. This is downsloping. This is not up here in 2019. Downsloping means I think this is a weaker structure. And we're right now down here, and we have this area, which now we're in October. And I think that this could very well be ice. And just as this was ice here. And so we need to be really
slipped all the way to till year end.
Yes.
Slip and slide till the end of 2022.
And the only other thing I would say in conclusion just is that what we need, if this is in fact a spring, which is what our seasonality chart would suggest, then we need to get back above using your idea of the 3800 level.
It's not just mine. It's everyone's 38.
Everyone's. It's got to get above that in a hurry. And springs usually, when they resolve, they do it quite suddenly, dramatically. And so this thing would have to take this bad news of the CPI and then be able to have a bad news bottom and rally and climb the wall of worry. And that would be the thing that we would need to see to suggest the scenario might not be the right one.
What a great interview, Bruce. What a nice presentation, and really so many nuggets on range bound with the climax in UUP and quarter end look, and then the midterm seasonality really brought a lot of insights to us today. So
and then the only other thing I'll tell you about is that we do a free Wyckoff market discussion. Well, we're doing a free one next Wednesday.
Okay.
And so people are welcome to join. We don't share your information. Go to ForexAnalytix and come join us. It's a blast. We have a lot of fun.
Yeah. So if you think you learned something here in 30 minutes with me interrupting Bruce every minute or so, just imagine that I wasn't here interrupting, how much more you would have gotten out of it. So
The interruptions are the fun part.
we have to have fun. And Bruce, thank you so much for, bringing some clarity and some things for us all to consider going into year end. Look forward to talking to you during the winter sometime.
Thank you, Dale. And
All right.
Thanks everyone for having me.
Bruce Fraser, and join him next Wednesday. Learn about what he knows, and he's a patient guy, and you're going to learn from
Hey,
him.
thanks for joining us, Bruce. Just want to say thanks.
Thank you, Blake. It was a blast. It's always good to be here.
Hey, Dale,
Okay, buddy.
just heads up, your microphone's kind of light, so I don't know if it's up on your head or something.
It's my mouth.
Oh, okay. All right.
All right. Anyway, thank you so much, Bruce. I'll
Thank
catch
you
you
all.
I'll catch you on Twitter, buddy.
Okay. Take care, everyone.
All right, Bruce. And everyone could join the team on the Morning Edge 15 minutes from now exactly. So now I'm going to find out what the markets are doing. Sometimes it's not easy just conducting an interview when you have a lot of positions on. Anyway, you're welcome, guys. See ya. 10 years at 4. All right. Thank you. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.